Good morning, everybody. I'm a few minutes early. Rob got me all riled up saying, "Let's rock." Cav, nice to have you back in the room, man. Hope you're doing well. Good morning, Luciano. Hey, Steve Diego. Erla, nice to see you. Steve, did you get my reply using the 8 range for crude oil? Good morning, Miss Adriana. Cool. Cool. We got all the cool kids in here today. I like it. We got some of the new kids, some of the old kids, some of the trend traders, some of the momentum traders. Good morning, Jerry. We've got the HVA traders. We got the 2 charts, the 3 charts, guys. There is a million ways to do what we do. But this classroom, we keep it pretty basic in the beginning. We talk about the most straightforward approach, and it all revolves around advantages and your ability to recognize them. So we're going to start off with what I think is the most important advantage you can start your day with. I mean, next to coffee, of course. Checking news, going over to forexfactory.com/calendar, making sure that there's nothing going on. Is SIM always with delay even if you have active data? No, Adriana. I don't seem to have any delay in SIM. I'm not sure why you would. It's possible. I don't know. I could guess, but I don't even know. What I would do, Adriana, is I would hop on with Jason real quick and have him take a look just to see if there's anything crazy going on and see if that helps. Sorry, that's kind of the one that I don't know. I wish I did. Guys, today is Tuesday, October 15th, and at 8:30 a.m. we had some medium impact news. That was that orange box. I'm not sure if it made the market jump or bump or not. Hey, good morning, Zorro. But it always has the potential to when it is medium, when it is high impact. So we're kind of sitting on our hands until Thursday, and then Thursday they should light it up with the high impact. But I do this every morning. I check on it because I want to make sure that I don't accidentally step in front of a bus that is high impact or medium impact reactions. When we talk about the rules, when we talk about what we're looking at, what we're looking for, guys, the education page here, the nexgent3.com, go to education, specifically the trading guide. This is really where everything kind of comes from. This is where all my answers come from. When we talk about trades, when we talk about looks, when we talk about market flow, there's something in here for everybody. And I do want to go to the frequently asked questions, common terms, specifically the common terms, guys. This is kind of the glossary, things that you'll hear in the room, things that revolve around trading, all that sort of stuff. And the one that I want to talk about, first, hey, good morning, Jay, is the high probability trade, guys. Because this is a trade that is defined when each indicator on every chart agrees for the rules of the trade. Typically, this is when all the triggers are their strongest, no termination conditions exist, and there's no trouble spots between your entry and your target. Guys, this is the best of the best, and this is really my focus for the first hour each and every morning. And this high probability trend trade that we're going to talk about is a high probability trend trade. It goes with the trend, it goes with direction, momentum. There's nothing in the way. And guys, the way it's taught in this room, this is a trade that typically wins 70 to 80% of the time. This is very much a foundation trade. This is the first trade, not the only trade. We do this because this trade wins more than it loses typically. This is a trade. There's an old saying that you develop confidence through the memory of success. So this is the trade that's going to help you develop that confidence. But the most important thing that this trade does for you, this little segue over to the PowerPoint, is this trade teaches you to read your indicators. It teaches you to look at your charts and really kind of have this very active idea of what the market is telling you, and you'll be able to begin to speak to yourself in terms of the advantages that you see, and you're going to piece these advantages together to create a trade. However, chart reading looking at your indicators, doing this in the moment study is about 90% of your day. And this is surprising to a lot of people. 90% of your day is really spent doing nothing. The most successful traders I know are really good at that 90%, doing absolutely nothing when there is absolutely nothing to do. 10% of your day will be active. 10% of your day will be taking trades. 10% of your day will be entering the market because the advantages are there. And when you get to where you're comfortable reading your charts, recognizing these things, you will understand where the market is likely to continue. You're going to get very good at understanding where the market is likely to go, and you're going to understand where the market is likely to stop. And all of these chart reads are going to factor into your day as a day trader. Waiting is very much a learned skill, Rob. Waiting is the hardest thing to do. And I'm telling you, I wish that there was a way to just adjust the brain and not get emotional, but people like to be active. Once you understand these things, though, guys, you're going to use this likely to continue spot. This becomes your entry for the highest probability trend trade. This is the point specifically where the market is most likely to continue with the prevailing trend. You're going to be able to pinpoint it with pretty amazing accuracy. You're going to understand where the market is likely to go using Fibonacci and trigger lines and momentum. And you're going to be able to really pick out profit targets using this concept. And then where the market is likely to stop is what we call a termination condition. And this is where trends end. This is where fights happen. This is where decisions are made that can ruin your good time. And we're going to cover all of these, and we're going to do it with only 3 rules. And I get excited every time I tell you guys that it's only 3 rules. And then I say something clever like, don't overthink them. Don't add things to them. Don't create scenarios outside of this simple approach, guys. Each rule gives an advantage, and it's the 3 advantages that create a trade. And I want you to start talking out loud every time you look at your chart. Do I have momentum because of strong trigger lines? And is there a clear path? Because none of those likely to stop, those termination conditions are in the way. And man, if these rules are true, let's go find where the market is most likely to continue. And here is the best part of it. Is guys, once you're good at momentum, literally half a day's worth of study, you are going to have an advantage that pushes the market in the direction of the trend, that breaks areas, that covers mistakes. And then when you couple that with a clear path, these first 2 rules, guys, you have enough to create a profitable, consistent plan. And you're going to see it in the room a lot today. Momentum and a clear path, guys. These advantages are, they're universal. And when you have them, great things happen. Your third rule is specific to the high probability trend trade, and this will be the entry area. This is where you will precisely find the point where the market is most likely to continue. So let's keep it real simple today. Just 3 rules, and let's only use 2 charts. But Mark, I see people using a 3rd chart, a 4th chart. Shouldn't I have 3 or 4 charts? No, not if you're new. You don't need them. Let's build this great foundation. And again, my promise to you is once you're good at this chart, the large chart, the momentum, the clear path, you'll be able to find opportunities, guys. And the large chart is a slow chart. It doesn't move fast. It doesn't show change quickly. It is very much a broad stroke of a brush. And it shows the overall opinion of the market. It will define the direction of the market, which way you should be looking for rules to be met. It will define the momentum in the market through rule number 1. And guys, it's even going to define the areas in the market, making sure that you haven't reached a trouble spot or being sure that you've cleared the previous trouble spot. And that's rule number 2. 66% of your advantages, 2/3 of your advantages happen on the large chart. And there's people in this room that will tell you, don't even look at a small chart until the large chart says it's time to look for an entry. But once it does, guys, the entry chart is a smaller, faster chart. It's a refinement chart. And it'll take 1 bar from the large chart, the most current bar, and break it down into 20 to 30 bars. And you're going to use this refinement to pinpoint precisely where the market is most likely to continue. This becomes your entry for the highest probability trend trade, guys. And by using this refinement chart, you're going to be able to reduce risk dramatically, and you're going to be able to increase your profit potential. So we're going to use 2 charts and 3 rules, and we use them, use the 2 charts because it very much, it's the opinion of the people that are controlling things, guys. The large chart is a reflection of the large crowd. It's those large crowd opinions. If they wake up and want an uptrend, guess what? We're going to be in an uptrend. And if they want it to go up fast, they will establish the momentum. And when the large crowd reaches these key areas on the large chart, guys, they make decisions. They make decisions to enter, to exit, to take profits, to fight, whatever it's going to be. Large chart should lead the way. And then once the large chart says that we're going up, once that we have that momentum, once there's nothing in the way, the small crowd are the people that like to do little shove backs. Sometimes they're doing it to enter the market at a better price. Sometimes they're trying to change the direction. But this small crowd fails nearly 70 to 80% of the time, or at least gets to where they want to be. You'll be able to pinpoint their failure. You'll be able to pinpoint using that refinement chart where the market is most likely to continue. So the large chart is going to be slow rolling. Everything says up. The small chart, excuse me, is going to have these little pushbacks. And you'll notice that when the market goes down here, the large chart doesn't even flinch. And that's how we're going to be able to capitalize, guys, is by taking advantage of that small crowd. So we're going to spend the first hour, and we're going to talk about the rules and the trigger line looks, the Fibonacci rules for when it's okay to trade. I will break them down individually. We will do each rule individually to make sure that you understand exactly what it looks like. I'm going to remind you what advantage it provides over and over and over. And I'm even going to give you a way to study it so you don't make mistakes recognizing the rules when they're met and when they're not met. You guys should be simulating. You should be practicing. You should be out there willing to make mistakes, guys, because mistakes are where the magic happens. That's when we all get better. And the first step in becoming a confident trader ASAP is posting your trades in class, guys. So when you're practicing, when you're trying, when you're learning, when you're breaking stuff, post it in the room and tell me what you saw and tell me what you were thinking and tell me why you entered where you entered. And what happens is every time you do that, it's a private session. You and I are going to talk. I'm going to say, hey, I noticed, and this is exactly what I'll do. I noticed that your momentum was outstanding and your path is clear and you absolutely nailed your entry area, and that's probably why you did so well on this one. Or we'll say, man, you had the momentum, but I want you to see how this Fibonacci area created an untradeable bounce for you. And even though the entry area was great, there was a fight at an area, and that's what got you out of there. And here's how we'll do it better. And I do that with every picture that's posted in this room. I don't grade you on wins or losses, but we talk about chart reads to get you where you want to be. And you'll find that I'm very consistent with the language on the rules to make sure that you're trading with advantages. So we're going to simplify. We're really going to focus on this high probability trend trade for the first third of the classroom, sometimes the first half of the classroom. Your job is to figure out what it looks like when it's time to pull the trigger, guys. I'm going to teach you that, but you're going to have to commit it to memory. And you've got to learn these looks so that they become easy. And that's where the spreadsheet comes in. And guys, I don't know why it's so hard to get people to use the spreadsheet. I don't know why it was so hard for me to use the spreadsheet. It just feels like work. I don't know how to take a bar from the 5-1, Rob, and put it on the 13-2. Are you talking about the text that says where you get in? So the same way you get it on the small, guys, we're going to do a quick little interlude here so Rob can do that and still trade. Right click on your large chart, go to data series, scroll all the way to the bottom and make sure that it plots executions. But Rob, I'm going to say this isn't your entry chart. Doesn't matter. Small chart's what matters, but that's okay. That's how you do it. Data series, scroll down, plot executions. Guys, the first tab of the spreadsheet that you're given when you download software, the first tab of the spreadsheet that I'm dropping in the room right now, this is your trade journal. And for a lot of you, this is going to be your hurt feelings section because you're going to lose trades but you need to take pictures of them. You need to post them in this journal, because what happens is you're not just going to drop them in the room for me. You're going to put them in this trade journal, and you're going to come back tomorrow and you're going to look at them and you're going to say, okay, what worked? And you're going to find yourself saying, man, momentum and clear path works an awful lot. And you're going to ask yourself what didn't work. Maybe you're fighting trigger lines. Maybe you're trading into areas. But if you do this little study, you're going to notice that what works when you're following rules feels very relaxed. And rules take a lot of the stress out of trading. And the things that feel make you nervous are when you know you're breaking your rules, guys. And this is when you start fidgeting and moving stops and targets and hoping and wishing. In this little study each morning, guys, it prepares you for the day. It will accelerate the learning. And I think using this section a lot, the feedback from class, I've been doing this for 5 years, and I see things that you won't see. The same way John Novak sees stuff that I don't see. And I'll point it out, and we'll talk about it. And if it's a challenge, we'll talk about how to fix it. You will have the fix to all of your problems right here if you just post them in the room. The second tab is where we've broken down the rules of the high probability trend trade, made green sections, because green means go, right? Strong triggers, clear path, and what the entry looks like. I've done a lot of work on this one for you to give you things to look at, annotated charts to help commit these to memory. I'm also going to give you a sheet that puts you in the driver's seat, that has you taking the exact same pictures, creating the same annotations, committing these looks to memory so that they become easy. And when you know what it looks like to have strong triggers, it's equally important to understand what it looks like to have weak triggers. You want to be able to recognize your advantages quickly, but you also want to be able to recognize the disadvantages quickly, because every time you look at a chart, you're going to be talking advantages. You need to know why you should be taking this trade, and you should also know where your analysis may fail, where there may be a problem. Maybe the triggers are weak, or perhaps it's one of those termination conditions. And if you commit these looks to memory, guys, it really starts to get easy, and you're going to build a trading plan. I'll give you one initially, something to follow verbatim to give you the highest chance of success. But you're going to grow outside of that. I'm giving you the first trade, the best trade, the highest probability trade. As you learn it, you're going to begin to see patterns over and over and over. You're going to recognize things that are creating success. You're going to recognize things that create opportunity. You're going to see things that may build outside of that initial plan. Put pictures in here, commit them to memory. Talk about your management. Talk about the patterns that you see. Focus on termination conditions, guys. It shows up like on every page, because the reality is termination conditions is the most broken rule, rule number 2, because it forces us to be patient. So use your spreadsheet, take your pictures, fill it up, do the work, guys. You will get out of the software what you put into it, and I can tell you that the people that post the most get to where they want to be the fastest. So we're going to break them down individually. Rule number 1, large chart, big chart, slow chart, broad stroke of a brush chart. Must have strong trigger lines, guys. The large chart leads the way, and the first thing that you're going to get off that large chart is direction. If the background is green, the market's going up. Go up with it is typically the path of least resistance. If the market is red, the trend is down. We're looking for rules to be met for high probability trend trade short. But this color comes into play, guys, because I can't have strong trigger lines if the colors of the background, the large triggers, and the small triggers don't match. If the background is green, my triggers have to be green to have that strength. And if the background is red, my large and small triggers must be red to create that strength, because strong triggers means that my small triggers have broken up and above the large triggers. That's what paints the background green. My large triggers should be wide, angled in the direction of the trend, and it's that gap between the two. It looks like scissors that are open. That gap lets me know that the odds are favorable for the market to continue up. Odds favorable momentum, guys. You're going to write that on your charts a lot. OFM. Odds favorable momentum pushes a market in the direction of the trend. When the smalls are below the large are wide, the space is there. Odds favorable momentum pushes the market in the direction of the trend. This same strength can break key Fibonacci areas, and very often this strength can cover up some of the mistakes that we make as new users, guys. And when I have strong triggers up, I'm using that refinement chart to buy a pullback, to get in at Fibonacci support, to continue with the trend. On your large slow chart, it looks like a tail. You're going to be able to pinpoint exactly where these tails are most likely to form, and that will become your entry for the highest probability trend trade. But if I have strength, I have to understand weakness, guys. And when those scissors close, when the small triggers work their way inside of the large triggers, we call this a weakening of the large triggers. And when I have weak triggers, anything can happen up or down. Weak triggers create deeper retracements. Weak triggers at key areas are typically a precursor to potential reversals. And guys, knowing the difference between strength and weakness will help keep you focused on that first advantage. So let's open up a large chart. Strength. There's one of those tails, potential entry, to ride it all the way up to weakness at a fib where the reversal happens. Strength once again, another tail. We've got strength to the downside right until it hits Fibonacci support. And then can everybody see on the most current bar, this is a market that currently has odds favorable momentum to the downside. The trend is down, the momentum is down. Guys, this is what it looks like live in the market when it's time to look for an entry. Can you guys give me a why if you're good with that? Odds favorable momentum is probably the easiest lesson that you're going to get. Separation means strength. Thanks, Jeffrey Dean. You're my favorite this morning. Once I have momentum, got to make sure I'm not trading into a brick wall of support or resistance, guys. Termination conditions false. No likely to stop areas in the way, guys. That's going to make sure that you have room to your profit targets. And just a little heads up, guys, the goal is to get paid. You might as well have a clear path to the payday. So when there's none, when there's no lines in the way, we're going to say we have a clear path. And on the large chart, that's really what it is. Lines can stop the market. Horizontal lines on the large chart are areas, and areas are where decisions are made by the large crowd. This is where maybe buyers take off all their profits and the sellers take over. This is maybe where even more sellers were waiting to push it down. This is where fights can happen. These areas can create consolidation as buyers and sellers fight. So, good morning, Miss Cindy. We use these lines to say to ourselves, decisions may be made at magenta divergence highs and these cyan divergence lows, blue Fibonacci support, red Fibonacci resistance, and yellow 1-to-1s. You don't have to know how they come to be. Just understand that when price reaches one of these areas, decisions are going to be made. So that's kind of the recipe for picking these termination conditions out, guys. The first part is you allow price to reach the area. So you might be in a giant downtrend. You may have all the momentum in the world. Everything says the market's likely to continue down. And then you reach Fibonacci support. And when you reach Fibonacci support, there should be this little light that goes off that says, hey, this is where they're going to make decisions. This is where the buyers buy and the sellers sell. This is where reversals can happen. This is where fights can take place. So when price reaches support, I want each and every one of you to ask yourself, where are my trigger lines? If your trigger lines, small and large, remain above the area of support, guys, you've reached a termination condition. No trades into that area. You have to be patient. Every line you hit is going to be a termination condition, at least for a fraction of a second. Same is true. Market's trending up. Everything's going up. You reach Fibonacci resistance. Where are my triggers? They remain below. Rule number 2 is not met. No trades into this area, guys. And what you're going to find is that these areas may create bounces and fights. And if they reverse the market completely from a high, if those large triggers pinch and roll, or from a low, those large triggers pinch and roll, guys, we call this a strong top or bottom. And a strong top or bottom is the precursor to the highest probability trend trade you can take. So it's really pretty simple to define areas, and it requires a little bit of patience. And I want you to see how effective Fibonacci can be. Price reached Fibonacci resistance, every trigger remained below, and there's your reversal. And guys, this is the live market. Price came to Fibonacci support, every trigger remained above. And look at the bounce. And then we do it again, and I think I can just use F6. Nope, wrong one. We see it again, and we see it again. And guys, this is the first safety measure for you with this software. Understanding exactly where the market has the potential to stop and saying to yourself, I choose not to go long into that area with the triggers below, or I choose not to go short into that area with the triggers below. And guys, once you understand this concept, you need to know when the area is broken. So price reaches support right here and the triggers haven't broken, and everyone in this room says, you know what? I don't have to be the first guy through. Let me hold it. Let me wait. Let me see what happens. And if your small triggers and your large triggers get below that area is considered broken. And if that area is considered broken, well, we're going to call that a clear path. And if the path is clear, it will remain clear until the next area is reached. So price reaches Fibonacci resistance right here. Look at how far south these trigger lines are. Absolutely no trades into that area. Small triggers and large triggers break above it. Resistance behaves as support, guys. Your path remains clear until you reach the next area. So those are the two options for brand new users. And I want you to take a week or so. That's it. Where are the triggers? The only thing price does is it reaches the area. Once price hits the area, it is 100% the job of the triggers to let you know the condition of the area. If they're above, stop. If they're below, stop. But here's the cool thing. If they get below support, look for a trade. If they get above resistance, look for a trade. Guys, this is really it. Where'd my chart go? There we go. It's either a termination or it's a clear path. And if you keep it simple, give it a week. What you're going to do is you're going to set yourself up for the next trade. And guys, I'm going to give you a plan for this trade as well. And I want you to see something. 50% of my triggers have broken through the area. 50% have not. And here's the key to this look, guys. Odds favorable momentum. So we call this a 50-50 trade, guys. So when smalls smash through the area, but the large are lagging behind. My fingers are moving too fast. This is a 50-50 look. It must have odds favorable momentum to have the potential to break, but guys, that's exactly what it is. This is potential to break, not broken, not a clear path, which means that this is going to be your first medium probability trade. And a medium probability trade means that most of your indicators line up for a trade. However, small issue exists. That small issue is you don't have a clear path, which means that you need to rely on momentum. You want a low risk entry area if you're going to consider taking that trade. I will give you a plan to do that. This will probably be the trade that you take the most of, is that medium probability look. I'm going to give you a plan that optimizes your chances of success with it. Let me drop this in the room. Some of you guys should steal this. Put it into your spreadsheet. This is, whoops. Did you see that? Man, I only put the words in there. Let's try this. There we go. This is the most lost trade among new users. The most lost trade among new users. Because the path isn't clear and they begin to sacrifice momentum as well, guys. So, is everybody good so far? Termination, termination. Even though we get the clear path, termination, termination. Rule number 2, keeping you out of consolidation. And guys, now we have odds favorable momentum down here. And look at that, the path broke. There's your tail, and off we go. Pretty cool. I'm going to circle this tail because I have a feeling this is going to come back into play. That may find its way into a lesson. So, brand new users. No triggers through, not broken, no clear path. You don't have to take a trade into that area. Relax, right? Cindy, we don't have to trade into termination conditions. And guys, these termination conditions are going to find their way into your trading plan, setting you up for the next trade as well. If the small and large are through, guys, the area is broken. Resistance is support. The path is clear. Let's enjoy it until we reach the next area. And then once you're good at those, once you can identify momentum, once you can start to really use your trigger lines to determine whether an area is broken or whether it's a termination, it opens the door for these 50-50 trades, these medium probability trades. And there may be opportunities on these, but they have to be managed aggressively. There may be opportunities and it may break and it may be a home run. But understanding what you're up against lets you know what sort of management hat you need to put on. There will be times when your path isn't clear because the areas are stacked. Maybe fib behind fib behind fib. Maybe fib behind 1-to-1 behind divergence high or low, guys. This is 90% of your day. 90% of your day is doing a whole lot of nada. 90% of your day is waiting for these advantages to come to be. 90% of your day is sitting on your hands, playing solitaire, petting the dog, whatever. That's okay. It's okay to do nothing, guys. The futures markets trade billions of dollars every day. Billions. That's with a B, a capital B, should be. And it's not necessary to be in every move. It's not necessary to try to catch every tick. You don't have to be the first person in a move. You don't have to be the last person out. And the reality is, guys, is we are taking advantage of everything that the large crowd does in small increments. And our job is to get paid. So if sharks are the big money investors, I'd like to share this picture. The sharks are the guys that are the large chart. They are creating trends and they're establishing momentum. They're reacting to these key areas, guys. We want to stay out of their way. We don't need to be first. That's where we end up in the belly. We can be remoras. And remoras, my brother got mad at me. He goes, we're not bottom feeders. We're not bottom feeders. We take advantage of opportunity, guys. And when this guy saws a tuna in half, there is more than enough for us to eat. We don't need the whole tuna. We just need a couple bites a day to get to where we want to be. So when he's reacting, when that potential is there, we sit on the sidelines. We bide our time. We wait for that clear path and momentum because that's when advantages get us into trades. And Fibonacci will give you the ability to see exactly where the driving forces of the market are most likely to make decisions, guys. And very often, rule number 2 will keep you out of consolidation and chop. And man, this is the September contract of the S&P. And look how rule number 2 clearly identifies consolidation. And then if we look at today in crude oil, look at how rule number 2 clearly defined the areas that needed to break so that you could look for opportunity to take it on down to the next area. Pretty outstanding, right? Guys, you have advantages that other people don't. You can see exactly where these driving forces are most likely to make decisions. And that's termination conditions. So the large chart has to have strong trigger lines. The T3 trigger lines, the separation, give you strength. That strength is the advantage of momentum, the first thing that we look for. Once advantage 1 is present, we're going to make sure that there's no lines on the large chart, no termination conditions, and once again, we're going to use the trigger lines to determine whether they are a termination, whether they're broken, or whether they have the potential. We're going to insist brand new users on a clear path because this is the easiest way to trade the software as you learn to read it. And once we have momentum and a clear path on that big, slow moving chart, we're going to go to the small chart, that fast chart, that refinement chart. Let me show you a picture real quick. So on the large chart, inside of this one bar is all of this movement on a small chart. So we're going to use the small chart to refine the large chart, to pinpoint where that tail is most likely to happen. if you go to the small chart to find your entry and you see 3 divergences in the same price range, if there are 3 losses of momentum evidenced by a cyan line at a low 3 times, magenta line at a high 3 times, guys, 3 divergences in the same price range may terminate the trend. You'll see this on a smaller chart because of the number of bars. It'll actually show you change that you can't see happening on that large chart. So 3 divergences in the same location on the small chart, rule number 2 is not met. You don't have a clear path. It is a termination condition. You'll see these on larger charts as well, but you're going to see it on the small chart first. It becomes even more powerful with those weak anything can happen triggers, guys. You've lost momentum not only through the pivots, but also in the trigger lines. And it becomes more powerful still if that final divergence is higher than the previous from a low or lower than the previous from a high. It creates a little head and shoulders pattern. So guys, this is the only time, can't stress this enough, the only time the small chart will talk me out of a high probability trade. But if those 3 divergences aren't present, I'm going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. I'm going to use a limit order, which means I'm literally going to wait for the market to come to me. And I'm going to do it at an area. Fibs, midbands, or yellow 1-to-1s, guys. The way lines on the large chart can create bounces against us, lines on the small chart give us a bounce point to continue with the trend. But I need them buried inside of triggers, guys, because triggers are where the market is most likely to return. Trigger lines on your small chart. You're going to have 2 sets of large triggers. The ones that are native, the smooth large triggers, and price may return to those triggers on the small chart. And then you're also going to have the synthetic triggers, and these are just the large triggers from the large chart, and price may return to the large triggers. Trigger lines are a correction point, and it's the areas inside of them where I expect the bounce. So when your correction points are one on top of the other, like 2 snakes riding piggyback, it's the least amount of room for areas to be inside. It's the highest level of accuracy, guys. So much so that we call them favorable large triggers. So when you look at your chart for entry, you've got to look at the large triggers and say to yourself, price may return to these large triggers. And then you've got to look at the synthetic triggers, and you have to say to yourself, price may return to these synthetic triggers. The areas inside of the small may produce a bounce, and the areas inside of the large may produce a bounce. And that's why we're going to create a window of opportunity, if you will, that gives you the areas inside of favorable large triggers that define exactly where the market is most likely to continue with the trend. And it's a 3 or 4 step process. And of course, it all begins with having odds favorable momentum. Everything should start with making sure that you have momentum and a clear path, right? This assures you the highest chance of success as you go into this trade. This is what guarantees that we're looking at the high probability scenario. And then we're going to wait for a reversal bar. What is the reversal bar? The reversal bar is the signal. It's the beginning of the fight. It's that small crowd trying to push down to create a retracement. The reversal bar is not your entry. This is a loss of momentum. We need that loss of momentum to get us to our entry. If you're one of those jumping in momentum traders, guys, this close on the wrong side of the triggers is an excellent exit opportunity, because very often when the rules are met, your momentum trade pulls back. And that reversal bar signals the beginning of the fight. And once I get it, I'm going to look for those triggers, large and synthetic. And I'm going to say to myself, this is where price may return, but these triggers are not my entry point. I need areas, fibs, midbands, and yellow 1-to-1s, all caps, guys, inside of favorable large triggers. And this is where we create the window of opportunity, that point where the market is most likely to continue, that point where the small crowd is most likely to fail. And it extends from the highest point of support to the lowest point of support inside of favorable large triggers. But because of the momentum on the large chart, because there's nothing in the way on the large chart to create a bounce, your limit order goes a couple ticks above that highest point of support. And this becomes your entry for the highest probability trend trade that you can take. And let's do the little visual here. Dun, 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 dun. Reversal bar prints, price may return all the way to the bottom of the triggers. And that's exactly what we're going to do. We're going to use that white line to show us where price may go. And then we know that it may bounce off of support. We also know that it may bounce off of support. And I'll never know which one it's going to bounce off of or if it's going to bounce at all. But my entry goes at the highest point because I'm not going to trip over a couple pennies to save a few dollars, guys. And then anything on the wrong side of the triggers, anything below the triggers for a long trade, anything, it's wrong. It's beyond where the market should go, where I expect it to correct, where I expect it to bounce. These are not a part of the window. These are not where I want to try to enter. Hey, good morning. Nice to see ya. And then for a short trade, this surprises a lot of people new to futures. You can make money whether the market's going up or down. When everything says down, when the momentum is its absolute strongest, when there's nothing in the way, and that fear of missing out is making you chomp at the bit for a trade, you're going to wait for a reversal bar. This reversal bar says to you, hey, the fight is on. This is the beginning of the pullback. This is not my entry. Hey, Philip, good to see you, man. So at the time of the reversal bar, I look for those favorable large triggers. And I remind myself that my entry is not the impact on the triggers, but rather the areas within. This is one of those magical moments, guys. There is one line, a mid-band, inside of favorable large triggers. This mid-band represents the point where the market is most likely to continue down. This mid-band represents the point where the small crowd is most likely to fail. And because of that, you guys are going to activate a limit order a couple ticks below it, and you're going to wish, hope, want, and pray that that small crowd gets to you. And if they do, we're hoping for that continuation down. Anything beyond the triggers, beyond the window, guys, up here, it's not in the window. This is where the market should not go. And I want you to embrace that phrase, because where the market should not go is your first stop placement. This is where you're going to say to yourself, I have momentum. I have a clear path. I've defined my entry area. And if this is one of that 20 to 30% that this trade doesn't work out, I don't want to risk $1,000 on it. I want to put my stop right where the market shouldn't go. And if they hit me, I'm going to be okay with that because it's a cost of doing business. And anything that wins 70 to 80% of the time, it has to lose 20 to 30% of the time, or the ratios don't work out. So identifying where the market is most likely to continue gives you the ability to define exactly where it shouldn't go. This is the first stop placement in your management. But with all those advantages, you're more likely to get a reversal bar in the direction of the trend. That green bar up, that red bar down. And when you get a reversal bar, you'll be able to reduce your risk 2 ticks below it for a long or 2 ticks above it for a short. And it's not uncommon to see you guys take the perfect entries, get that reversal bar, and then someone on the small crowd ate too many Wheaties that morning and they still push down, and you're giving up 30, 40 ticks because of your great entry rather than 30 or 40 ticks, or 30 or $40, excuse me, instead of $300 to $400. And guys, great entries create manageable trades. Great entries reduce risk. Great entries give you more room to your profit target. So I'm going to ask real quick, is everybody cool with what we just talked about? We talked about the best of the best way to catch these trades. Momentum on the large chart. Nothing in the way on the large chart. Pullbacks to areas inside of favorable large triggers on the large chart. Brand new users, I blanket you with all of these conservative, just, hey, let it be the best of the best in the beginning. You're learning to read your charts. And the best of the best will always be the best of the best. But let's be real. You're not always going to get the easiest entry look. You're not always going to have the clearest path. And sometimes you may not even have the best momentum. Your ability to read charts will define that. One of the most common things that we see looking for an entry, especially when it's closer to a high or low, is split trigger lines. where the large and the synthetic are not overlapping one on top of the other, where there's space between the two. And guys, this is where I really need you to take that lesson from entries and that verbiage that says price may return to large triggers. It may return to large triggers on the small chart. It may return to large triggers on the large chart. Does everybody see the gap? That's a pretty big gap, right? And then when you add into that it could bounce from this mid-band inside of the range, or it could bounce from this fib inside of the range. Because I studied, because I listened, I know that my stop goes all the way down here no matter where I enter this trade. Does that make sense, everybody? That's a lot of risk. I don't like that risk. That makes me tingle, and not in a good way, guys. So one of the things that you can do when the entry isn't perfect, and use those words, my entry isn't perfect, so I will insist on a reversal bar in the direction of my trade. And it doesn't assure you a winner, but what it does is if you get a reversal bar, there's a little cost of confirmation, but you know exactly where your stop should go, below that reversal bar, which means that you're not risking $300 to $400 anymore, but rather just right behind the bar. And it doesn't mean that it's going to go up for you. It still may come to the lower area, but you take a small loss and you potentially re-enter. And guys, this is a way to kind of circumvent that idea that that you don't want that much risk on there. And fourth time on this picture, why do we circle tails on the large chart? Guys, this is a study process. When I circle a tail on the large chart and the rules are met, and it lines up with an area inside of favorable large triggers, guess what? My rules are met for the high probability trend trade. That's the best of the best. So if we go back to the live market, let's take a look. And Andy, you said that it was happening right now, but I have weak triggers, right? I have weak triggers, but I do have a clear path. And I did have areas right there at those triggers. So kind of 2 out of 3. But let's look at this one after the breakout. He might. Check it out. Can you give me a why? Let's do this. Let's make some magic happen here. Boom, 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 boom. New users, you ready? Large chart. Do I have odds favorable momentum? Do I have strong triggers? Do I have a look that says, hey, this market may push in the direction of the trend? What do you guys think? This is for my new folks. We got to be able to do this quick. Market moves fast. Anybody? I'll send you a nickel if you answer me, guys. I've got self-esteem issues. You're killing them right now. Okay, I'll answer for you. Absolutely. We have odds favorable momentum. Do I have a clear path? Are my small triggers and my large triggers below the Fibonacci area? No. But it's red. Doesn't matter. Trigger lines are not quite there. So I know that I've got all the momentum that I need, and I know that this area has the potential to break. I'm going to go to a small chart. And I'm going to say, you know what? What are we doing here? Everything is screaming down. I do have triggers one on top of the other. I see some potential areas. Let me wait for the reversal bar. There it is. There's my reversal bar. And at the time of this reversal bar, I'm either mentally or physically going to draw a box from the lowest point of the triggers to the highest point of the triggers. And if I know that my stop has to go all the way up here at 65, there's my stop. Sorry, I'm using that for a different study. Let me make it easier to read. That's where my stop has to go. Guys, the triggers aren't my entry, right? The reversal bar is not my entry. I have to create a window of opportunity, and that window of opportunity extends from the lowest point of resistance, 70.57, to the highest point of resistance, 70.59. Does everybody see how I have a 2-tick wide window of opportunity, and I know exactly where my stop has to go if the small crowd pushes? Guys, this is the first part. And now we just have to wait and see if the small crowd can make it. And my entry
Order submitted
is going to be about 2 ticks below that area. And if they come up and they hit my entry, I'm in a short position. It's 70.55, guys. I'm in a short position just below the lowest point of resistance, just inside the window of opportunity. See how these triggers split a little bit on us? No areas in here. All my areas are up here. My stop is in place. Can you guys give me a Y
canceled.
if you're with me here? And I'll put a little circle right where we entered. And look at that, right off. 1 tick below, we get that reversal bar. Check this out. My new stop is 58. I was in at 54. I'm sorry, I was in at 55. My stop is 58. Guys, that is $30 worth of risk. And let's see what this momentum and clear path did for us. That's a whole lot of down, isn't it? What did it look like on the large chart? Straight to Fibonacci support with weak triggers, and that's what created the bounce. Guys, this is your high probability trend trade. So if I go back and I circle a tail, did it end up in an area inside of favorable large triggers? Can you give me a Y if you see it? This is how you're going to study, ladies and gentlemen. This is how you're going to develop some trust. You don't have to do it when the market's moving. Hell, it's hard to do it when the market's moving in the beginning. So let's go back and let's circle a tail. Once again, potential to break the 1-to-1s. Does everybody see? Let me make this huge. Do you see how price did not reach that fib yet? This is going to be a great lesson for you guys. Price didn't reach the fib. What does that mean to me? That means that from a pullback, I've got room to a target. Dun, dun, dun. So I'm scrolling back. Holy smokes. Look at this. Price could return to these triggers. Price could return to these triggers. I've got one line inside of triggers, guys. And that's exactly where the market continued up. This is what we're studying. This is the look that you have to commit to memory, guys. This is the pattern that has been proven to win more than it loses. This is the high probability trend trade. This is what I talk about for an hour every morning. Strong triggers, clear path, and an entry. This is the one that typically wins 70 to 80% of the time. This is the one that creates confidence. This is the one that teaches you to read your indicators. And to get to where you want to be with this software, guys, you have to be able to recognize these looks and patterns quickly. Because what you learn in the high probability trend trade is going to work its way into everything that you do. And once this one becomes second nature, the other ones just kind of materialize. So this is going to teach you to be chart reader sooner than later. And it involves a little bit of work. I'm so sorry to break that to you. Go take 25 pictures of strong triggers. Because when you take 25 pictures of strong triggers, you're not going to make mistakes on whether or not you have strong triggers, because you're also going to take 25 pictures a week. Which means for you brand new users, check this out. I'm going to open up a large chart, just like this. And I want you to see how efficient you can be without ever taking a trade. If I take a picture of this right here, that's strong triggers. So I'm going to use the call out button, and I'm going to say Smalls below large, right? Because there has to be separation. The colors agree. Space between like open scissors, right? I really want to make sure that what I'm doing, I can spell scissors. This is rule 1 met. This is strong triggers. This is the advantage of momentum. Does it seem like a little much to type all that out? I hope not. Because if you go through the whys, why is this strong triggers, what is my look, and what does it mean to me? Guys, you're not going to mess this one up. And here's the deal. One picture, there's strength, there's strength. And then in the very same picture, weakness, weakness. And why is it weakness? Type it out. Weakness, smalls inside large. Rule 1 not met. Anything can happen. So guys, in one picture, I've got strong, strong, strong. I've got weak, I've got weak. In this same picture, I could talk about termination conditions, right? Another termination condition. I could talk about when an area is broken. I could even talk about when areas have the potential to break. Guys, when I tell you that the fastest way to get to where you want to be isn't necessarily taking trades, but rather it's taking pictures. Taking pictures of the advantages and committing them to memory. And then most importantly, typing out why. So as you do that, because I know all of you are going to do it, because you all want to be day traders, the high probability trend trade checklist goes through those things and defines them not only in words but also in pictures. Is the market coming from a strong top or bottom? Is it coming from that termination that reverses the market? Guys, you can have a trade without it, but when you have it, it's the best of the best. So let's check it out. Price reached a divergence low. There's my termination condition. Here's where it reversed the market. Can we call this a strong bottom? The answer is yes. That means that this particular trade right here has a higher chance of winning because it's coming from a strong bottom. Whoops, other one. Define momentum through pictures, define weakness through pictures, define a termination, a potential to break, and also a clear path. Where the hell do I put my order? Guys, all of this is laid out for you, everything that you need, and also a trend trade checklist. Something for you to print out and grab your favorite crayon and make sure that you can mark yes to each and every one of these. And if you can, I've never had anyone do worse than 70%. Guys, print this out, use it when you do market replay. Make sure that you know what you're looking for, and when you have those advantages, make sure you know where you're going to enter. Because maybe it's just me. That's a hell of a good trade. I hope somebody took it. So what I'm going to do, next gift. Nice, Morgan. I was going to fly to California and have a talk with you if you didn't. Guys, I'm going to give you the KISS plan. The Keep It Simple Sunshine plan. The Keep It Simple Sakshi plan. That was just for you, Sakshi. Guys, this is a stepping stone in your learning journey. This is the first trade, not the only trade. This is the beginning, not the end. This is the one that typically wins 70 to 80% of the time. This is the one that optimizes your chances of success with a high probability trend trade. This is the trade that gets you going, that teaches you to read your indicators. And then through simulation, study, class feedback, and continuous practice, you'll be empowered to craft a plan that's tailored to your personal goals based on your experience reading the indicators. Once you can read your indicators, once you're good at this very basic trade, you're going to begin to see more opportunities. But until you get to that point, guys, keep it focused and keep it simple. Learn one thing really well before you try to add to it. In your simple plan for consistency, I haven't shown this one in a couple days. Don't fight the large chart, guys. That's your recipe for financial suicide. When you fight the large chart triggers, you're trading against all the momentum created by the people that are in charge. When you fight those areas, when you trade into those areas rather than from those areas, you're trading directly into those decision-making things, guys. This is the easiest way to lose your butt. And I'm going to tell you, if you can commit to this right here, you're already better than 70 to 80% of the traders that I've met in my life, guys. And then you have to define your entry. It's the KISS plan, but it's your entry. It's Gino's entry. It's Gary's entry. It's Jay's entry. And it's Cav's entry, guys. Trading is an individual sport. This is a you against the market kind of thing. So own it. Commit to the memories. The only reason to get into a trade is because the rules are met. And then once you get into that trade, that's when the adrenaline really kicks in. Most of you don't get nervous entering. Most of us will enter all willy-nilly. But once we're in, we've got to do something with that trade. We've really got to get the most out of it. The goal is to get paid. And management, if you keep it very mechanical in the beginning, if it's very if-then, if this happens, then this is exactly what I'll do, then guys, management takes a lot of the emotion out as well. You will create a different management plan once you're good at reading your indicators. This is the most basic form. This is the quickest path to payment. And everything begins with your great entry. Great entries create manageable trades. When you get into the market where the market is most likely to continue, you know exactly where the market shouldn't go. And that's precisely where your first stop placement is. And they're either going to get you or you're going to get the reversal bar in the direction of your trend. And this will be your first stop movement, guys. If I get a reversal bar in the direction of my trend, notice that I'm stressing if. If I get a reversal bar in the direction of my trend, my first stop movement will be 2 ticks above that reversal bar for a short trade, 2 ticks below that reversal bar for a long trade. I'm in the market where the market is most likely to continue, and now my stop is above the indicator that it's doing everything that I want it to. Guys, the KISS plan is designed to help you get paid. It's designed to get you comfortable being paid. It's designed to get you in and out of the market with the highest chance of success. Your first target is $100 away from your entry point. And if it goes to your first target, your first contract comes off. You're out of the market. You just made $100. Your palms aren't sweaty anymore. Your guts aren't twisting anymore. You've got confidence through the memory of success, guys. This is one of the best feelings in the world for the new user because it means absolutely you can do it, and hell yeah, the methodology works. Once you hit that first target, you're going to go break even. You're going to take all of the risk off of that trade because the one thing that's hard to believe, or remember at least, is that the only reason you're in this trade in the first place is because your larger, slower, big crowd chart says that we're going down with momentum and nothing in the way to create a bounce. And guys, your small chart will do everything in its power to talk you out of the trade. It'll create these fluctuations that are going to scare you. Don't worry about it. Large chart leads the way. Once you get paid, go break even, sit on your hands, and it's either going to hit your second target, which is only $200 away from your entry, or it's going to take you out break even. And guys, look at that. Another fluctuation designed to scare you on this tiny little insignificant chart. But if you hit the second target, that's a $300 trade. And a $300 trade once a day, every day for the year is $75,000 in your bank. Guys, once you do a little study, you're going to see the potential to be up around that 5, 6, 7, 8, 9, 1,000. And $300 is going to feel like a losing day to you because the reality is when you embrace these advantages, this is pretty easy to get. When you follow a plan, this is pretty easy to get for most people. But the key word there is when you follow the plan. So you've got to know your plan. And before you sit down to trade and you're not on simulator, if you're learning, break everything, post it in the room. But once you decide to go live, whether it's a prop firm, whether it's your kid's college fund, whatever, you have to know why you will enter a trade. I encourage you to name your trades. I'm about to enter a high probability trend trade. Why? Because I have to know what it's going to take to get me to exit that trade. I need to know what the conditions are to make me move stops. I need to know why I'll take profits or why I'll exit, guys. And initially, the high probability trend trade, you're just going to use the KISS plan because you're learning to read your indicators. But as you grow, as you get experience, as you get feedback, you're going to find reasons to manage differently. You've got to know these reasons and know exactly what kind of trade they belong to. Because when you add more trades, you've got more management scenarios, guys. Keep it easy. Keep it focused. Man, that's a lot, right? That's a pretty busy first hour. Guys, we record these so that you can go back and watch the first hour over and over, so that you can go back and break these rules down individually, so that maybe if high probability trend trades, the termination condition part is where you're struggling, you can go back and watch the video portion of that 10 times. Make sure that you get it. Bring your questions to class. I have given you everything that you need to be successful with the software. I've given you the rules that have been proven to win more than they lose. I've given you my spreadsheet. You have a place to study, and you also have references to study. I'm giving you right now, as we speak, the chart reading 101 so that you can break them down individually, know exactly what it looks like to have momentum, a clear path, and an entry area. I've given you the high probability trend trade checklist to make sure that as you go through that process, you know exactly what those pictures look like. I've given you the KISS plan to make sure that you can optimize your chances of success as you learn to read these indicators. I've reminded you that, guys, the goal is to get paid, and it doesn't take a lot of money on each trade to make a lot of money over the course of a year. And I've also reminded you to keep it simple. Know why you're getting in, know why you're getting out. And then the final thing that I dropped in that room is I took the PowerPoint that I used to teach each and every day, and I've turned it into a PDF format so you can go through and look at these pictures, whether you're studying entries or whether you're studying split triggers entries. Maybe you're curious about termination conditions or momentum or why we even become chart readers in the first place. You have everything that you need to be successful with the software. So if you're on demo, if you're brand new, if you're trying to figure out whether or not this is right for you, you need to take this information, you need to go back and circle some tails, and you need to give it everything that you have in your power to prove me wrong. And if you put that effort in, you'll be with us forever, promise. But if you just hope that because you bought software, you're going to be rich, if you just hope because you paid for a lease, you're going to be profitable, guys, that's not how life works. Just because I pay tuition doesn't mean that I get a degree. I have to do the work. I've got to learn to trust. And if I was in at 40, I made $100, and I might have gotten out break even. Who cares? It's $100. If I got in at 15, that one went all the way to 300. Hell, I'm done. I'm on the golf course, guys. That's the goal. Wake up, never get out of your underwear, make $1,000, go play golf, go shoot guns, go fishing, go take a walk on the beach, go live life. And that's what being a day trader allows you to do, guys. It allows you to enjoy the wonderful things in this world because you're done by 9 or 10 a.m. if you're following a plan. So, are there any questions about the high probability trend trader? Are there any questions about momentum? Are there any questions about termination conditions? Thanks, live market. Any questions about where the market should go? Right? Any questions about where the market has the potential to stop? Everything you need is in the palm of your hand, guys. The only thing that I need you to do is to participate, to ask questions. If you don't know what's going on, I can't help you if you don't tell me that. So, I'm going to disappear for 5 minutes. Ron's like, no, he's not. He's going to talk for another 8 minutes and then he'll disappear. When I come back, this is it, guys. We're going to talk about 3 rules on your charts. I don't care what kind of trades you took. We're going to break it down into advantages. My job is to take what you tell me that you saw and make sure that you saw it correctly. My job is to take the entries you show me that you took and see if there was a lower risk or a higher profit opportunity. My job is to take your chart reads that you tell me about and make sure that you're reading your indicators correctly. I can't do that if you don't post in the room. We're going to talk about three things. No matter what kind of trades you take, we're going to talk about three things. And what you're going to find on the trades that don't fit the high probability trend trade rules is that these things still come into play. The language, the advantages, the disadvantages, understanding what you get into. So, go stretch your legs. Go relax for a second. Go smile lots. I'm going to run a lap, pet my dog, refill my water, and when I come back, we're going to start looking at the pictures that you guys posted. I'll be back in 5, guys. right, let's get back to work. Guys, this is one of my favorite lessons. And I love it when this happens right when I come back from break. So, do I have, whoops, wrong one. Do I have odds favorable momentum? What do you guys think? This is my thought process every time I look for a trade. Odds favorable momentum? No, I don't. So, a lot of times, because maybe there's a medium probability set up, I'll say, well, do I have a clear path? What do you guys think? Smalls and large, there's no fibs, haven't reached the next area. Can I say that my path is clear? You guys feel comfortable with that? Yeah. And then I say to myself, well, let's look over here at entries. And there's my trigger lines. Right? There's my trigger lines. And I have to ask myself, and this is where I think language becomes so important. I ask myself, do I have an area, and what's an area? Fibs, mid-bands, yellow 1-to-1s. And then here's the key, guys, all caps, inside of triggers. What do you guys think? I feel like I have to say no, and I'm keeping it very, very simple. And before we go back and see what happened, because sometimes it's going to do exactly what you thought it was, I want you guys to see something, because this is what I want you guys to work towards. This is where I want you to be. So what we just did is very slowly talked out the 3 advantages. You will get to the point where that happens in a fraction of a second, and almost to the point to where you begin to anticipate your entry area because you're so good at the 3 concepts. So we said that we didn't have momentum, correct? So we'll just make that go away. We did have a clear path, and let's be honest, clear path feels good. I like it. And then I had to go through, and I didn't really have an entry area inside of triggers. My hope and wish for each and every one of you in this room is that you'll speak to yourself in terms of advantages, and you'll say something clever like, why on earth would I just jump in at a what? At a mid-band or a fib when 66% of my advantages have left the building? And does that make sense to everybody? All you're doing is you're talking about advantages. I think you should print this out, put sheets of paper over them. And when you've got all 3, you've got to learn to never hesitate. But as they begin to go away, you've got to say to yourself, this trade is becoming more and more difficult. It will have to be managed more aggressively. And if it's not perfect, I might give it a try with the clear path, with a reversal bar from an area, potentially, making sure I'm on the right side of triggers. You'll find ways to eventually capitalize and make small profits in these. But as a brand new user, go through that process every time. Is it the best of the best? Is this my highest probability scenario? And look at this. When I circle the 1 bar, the most current bar, look at all of the action that's going on inside of it, guys. Make the large chart lead the way. The large chart's going to give you the clearest view of what's most likely to happen. The small chart will help you refine it into an entry. So I just wanted to do that. Let me take all my drawing objects off. There's a lot of them. And I'm going to scroll up to the very top of the room, and we're going to start looking at the charts that you guys posted. Every one of these we're going to go through, and we're going to talk about advantages. And Joel got us going this morning, or actually late last night. So we're going to go through and take a look at what he's done, what he said. We're going to start with a large chart. And Joel woke up at 9:54 p.m. and started taking try and thought he would be very verbose. I like it. Could I call this odds favorable momentum? Wide like scissors? May I call this a clear path? It's like a Dr. Seuss book. Could I, would I, with this look? And guys, absolutely, that's the best trigger line look ever. There's no areas in the way. This is the perfect look. Notice that Joel circled the tail. And this is a weak bottom because it's not a termination that reversed it. And absolutely, your entry is going to go just above the areas, right there at the triggers. And what a great target right at fibs. And Joel, I can hear the smartassery in there, but it's picture perfect. And then you come back again. Odds favorable. Everything says up. There's a pullback to support. Since it's split, you could enter at the area. You can't call it a white bar trade though. Joel, are you in here? You can't call this a white bar trade because that requires a termination that reverses the market. No, I liked it. It sounded like Dr. Seuss. I meant that in the most complimentary way. Because what you did is you created this actual verbiage that's easy to read. And it sounded like a polite gentleman as you went through it. But perfect, Joel. But it's not a white bar trade because that white bar trade that John teaches requires a no triggers through termination condition. So if you call it a weak bottom, the white bar trade rules are not met. Does that make sense? But what you do have is a potential trade with the momentum everywhere and an HVA supporting it. It's an awesome read. It just doesn't fit the rules for the white bar trade. Nicely done. I was looking at your charts this morning. I was like, I can't wait to talk about these. These are great. Odds favorable. Everything's above. Perfect pullback. You can see that the triggers are a little split. And it goes right to the very bottom. Stop keeps you safe. And you make money again. The no through triggers, sure. So when we're talking about for the white bar trade, and guys, the white bar trade is advanced. It's a trade that John Novak's been teaching for a while. It's a trade that I'm happy to teach. There's a couple different looks when you get a termination condition. There's going to be the perfect look where absolutely no triggers break through, right, Joel? Do you see it? No part of any trigger made it through, didn't make it, absolutely beautiful. This is the precursor for the white bar trade. Do you see how the small triggers broke through here? Not a precursor for the white bar trade. Small triggers broke through here. Not a precursor for the white bar trade. No triggers through. Might have found something right down here. Triggers get through. Not looking for the long, but here where the triggers don't break through, maybe we're looking for the short. So one of those rules is that none of the triggers break through. And guys, once again, I want you to see this. You thought you were going long. It's still not going up. You're welcome, Joel. Great stuff. Another beautiful trade. Odds favorable, clear path. Odds favorable, clear path. Right back to the area. There's that 50-50. There's that potential to break. Man, Joel, I love it. You're not coming from a strong bottom. You do have odds favorable. Divergence prints. Ladies and gentlemen, this divergence is the biggest killer of the 50-50 trade. And they will work sometimes. But Joel says, you know what? I'm not taking the trade. My rules aren't met. This doesn't belong to me. And that's okay, Joel, because you're absolutely killing it all morning. You don't have to be in every mood to get paid. Triggers break through directly into support or resistance. All the triggers are below. Not a termination, not a white bar trade. So you guys looking for momentum trades. And Joel, let me show you. I'm going to do this too. Not momentum. Every indicator is down on your large chart and every indicator is below resistance. Do you see it? Going long is just, that's trying to be first. But over here, now your large have rolled, your smaller up, you get momentum on your range chart. The idea here is to have it come up and then pop back, and that's your momentum trade. When the small triggers break through and the price bars begin to get through. That's the easiest way to take something off of a top or bottom. That's what momentum looks like right there. And this is just too soon. It's actually going to be somewhere right about here. So it starts up. Your small triggers are super strong on the large chart. That's imperative. And you want to see those small triggers get through this area, because right here where you're circled, that's direct termination. Every trigger below, super fast or still down. You've got no indication that the market's going up there. Does that make sense? What you did is you're so good at reading your indicators that you're starting to anticipate the trade. You're starting to say, man, I'm getting close to this trade. And guys, that's where really understanding your rules pays huge dividends, because there's a lot of opportunities where they're almost met. And you need to learn how to insist that they're completely met, because that's what creates the statistical advantage. Joel, great pictures this morning. Absolutely awesome charts. All the study that you're doing is paying off. And I know how hard you work, so nicely done. All right, Andy Man says, check it out. Odds favorable momentum, potential to break the divergence high, coming from a strong bottom. Andy didn't want to show me these trades over here, but that's okay. No divergence, perfect entry. And Andy said, you know what? F that entry. I'm going to jump in way the hell up here and then get stopped out. Andy, what happened? Were you asleep? Does everybody see how this is where we want to be in this trade? Why? Because great entries create manageable trades. If you jump in, shoot, 60.75. If you jump in 9 points late, $180 late, look at where your stop is, Andy. It's right at a mid-band inside of triggers with this look on the large chart. Does that make sense? Great entries create manageable trades. And I know you were trying to carry that momentum, but doesn't it stand to reason that an area that may stop the market, that may create an untradeable bounce, gives you an untradeable bounce? That's that early trade, Andy. I've seen your entries. They're better. You did it here too. No room to make any money. You're missing the best. And I know you well enough to feel comfortable saying that. It's a good look on the large chart, but you kind of deep fried that golden goose by not taking the best entry. All right, Pete. And guys, if I go through someone else's chart and you have a question, feel free to ask. Yeah, Pete, let me read this. Just something you don't see every day. Oil in the afternoon. What size chart is that? 5 minute? Pretty boring, no volume, so you don't trade it. All of a sudden at 145, it dropped over $2 in a matter of minutes. Yeah? This was an institution hedge fund, producer, or refinery unloading a big position. They trade different than we do. Yep. So if you think your 2 lot makes a difference, it doesn't. I love this, Pete. This is awesome. This is normal oil volume in the afternoon, and there it is there. And the thing is it may not be someone entering. It may be somebody, unloading. Or, guys, it may be somebody with a lot of money stopping everybody out to get to their key area so that they can get a better price to be long. The reality is you never know what the market's going to do. That's why we trade patterns. Pete, this is a really cool picture. And it reminds you that you're not in control, guys. You'll never be in control. I couldn't remember which one I clicked on, so I opened 2. All right, let's see what's going on here. Up triggers, everything is strong. So this is the look. And man, Joel, I want you to look at this one too. This is early. This is what it looks like. Your stop, Pete, is the perfect momentum trade entry. When the smalls break and it pulls back, guys, that's your entry. This is just really hoping that it breaks. This is saying, man, they made it through, let's pull back to it. These areas are awesome. Yeah, and sometimes, and thank you for saying that, Pete. Guys, very often you're going to take trades and you're going to come back and look at it, and there's going to be a level of analysis that's heightened because there's no emotion. And I had someone ask me, how come you can read charts so well when we post them in the room? Guys, because I don't have any pressure of winning the trade. All I have to do is go back to those very basic looks. But this look right here, so just to give a little heads up, and a lot of you like to jump into trades, and that's okay. I'm not mad about it. You do what you want to do. But one of the biggest things, and I learned this from Ron, so I'm going to give away all of Ron's secrets real quick, is this line can create a bounce. This line can create a bounce. This line can create a bounce. All of these lines can create a bounce. So allowing the back end of the bar to get beyond that line, let price clear it. At least you have a shot. And then if it fails, it pulls right back to a trend trade and finishes the move. And what you did here, Pete, and I want to say this just for everybody else, and you know what you did, is when everything broke and the momentum was good, you put a stop just above the area inside of favorable large triggers. And that's the language for an entry when the market looks like this. Does that make sense, everybody? If I had a nickel for every time I've lost a sack of nickels by putting my stop where my entry should be, I'd have a lot of nickels. It's all right. Every now and then, Pete will take one of these on sim just for a lesson for the class. He's an educator at heart. There's no doubt in my mind. But guys, these are the things. When you post in the room, there's lessons for everybody. It's not just for the person doing it. Everybody gets a lesson on this. So, large chart strong, smalls above the large, clear path to the red fib. Let me see where you entered. 2631, 2631. So, certainly not a clear path. And guys, I say this for the sake of education. Right at 30 is the divergence high. If I carry that over here, I don't have the clear path. So Cav, this is taking the exact same lesson. I want you to see this. Back of a bar never got above that trouble spot until right there. And if you get in right here, it's clear sailing all the way to the fib. Does that, oh man, that's a good one. Because this divergence high is problematic. Get above it, because it can create some indecision. Nice trade, Cav. Good to have you back in the room. Jeffrey Dean. 50-50 possible break with the fib, both triggers breaking. I'll wait for it to come to me. Jeffrey Dean, why do you have a buy stop up here? If it breaks, you're going to go? Right on. And Jeffrey, I'm not going to tell you what to do. Yeah, why do that? Because once it gets all the way up to 53, you're still 50-50, and you potentially get in right on the reversal bar, right? Your large triggers aren't going to be through, and hell, your small triggers might be weak. Why not just wait for this one right here at the area inside of favorable large triggers instead of hoping it goes all the way up to 53? Just a thought, something to think about. Something to think about. Ron. Odds favorable. Everything's going down. Ron, you did the jump in, right? There's the jump in. Sometimes people lose. Two kinds of people. One that say they've lost a trade, and liars. Price retrace to the fib like JN teaches. Or like MN teaches. But guys, this is a good one. And I like this. And Ron, I love your trade. But when your momentum trade fails, it's most likely going to turn into a trend trade if the large chart looks like this. And then once it gets below the line, guys, pay attention to how he did this. It's easy money all the way down. He doesn't trade into the potential bounce point. He trades beyond the bounce point and carries that momentum right down to the fib. Ron, great trading. Great trading. Jeffrey, you said you're being cautious. Is it cautious to arbitrarily jump in at the top of a move? Or, oh my gosh, call me crazy. Is it cautious to trade a pattern that has been proven to win more than it loses, that has very specific rules designed to optimize your chances of success? This feels like erring on the side of caution to me. This says, man, I hope that shit keeps going up, and when it does, it just grabs hold of me and gives me money for the fun of it. That's how I read it. Again, guys, just giving you stuff to think about. I don't tell you guys how to trade. That's not my business. I teach you how to read indicators so that you can make good decisions. Pete, awesome large chart, separated, odds favorable, big momentum. You take the same jump in trade, and damn it, Pete, that's twice getting stopped out at the entry, the perfect entry for the high probability trend trade. Pete, I want you to run a lap, man. That's twice today. We actually did this one as a classroom. The entry was so stinking perfect. Yeah, Jeffrey, you guys get your joggers on. I love the entry, Pete, but when this one doesn't work out, take your small loss if that's a part of your plan. Or keep the risk on it, because that's the perfect trend trade. And it flies. And there's your second chance if you missed it. And then it comes down, and then you get this. And you entered on the way down, and you got your 22 ticks. It's nice trading, Pete. That's 2 times, though. So I recognize patterns. That's twice you've been stopped out at a high probability trend trade entry. That's rare for you. That doesn't happen a lot for you. That is outside of your norm. Guys, this is Morgan. Morgan's like 12, and he's trading better than me. Weak bottom, so don't give up any other advantages. Odds favorable momentum, 11. No divergence. Perfect area. Quick hundo. Following the market with a stop. Absolutely beautiful, Morgan. Great trading. Great trade. I love it. Talk about advantages. Soon the student will be the teacher. Jeffrey Dean, let's see what you did. Jeffrey Dean said, to hell with the best entry. To hell with getting in at areas inside of favorable large triggers. There's no way I'm going to take this perfect entry. I'm going to jump in on the wrong side of the small triggers and hope it works out. How'd it work out, Jeffrey? Did it keep going up? And guys, I'll get comfortable with you a little bit and play with you. How much would you have gotten if you got in at the line inside of triggers? Even if you waited for confirmation, you're in at 22, 32, 42. That's a $300 trade, Jeffrey. Isn't it? $300 by following rules, or $60 making stuff up. And guys, this is one of the biggest lessons that I like to share, that it's hard to teach because it takes trust to get in here. It really does. And we have this fictitious idea that it's so much safer if I jump in over here. This is what we're looking for. You're not driving anywhere today? Good, because clearly you're drunk. So, 35 to 14. $210 worth of risk from up here in the middle of nowhere. Once you get the reversal bar, no more than 120. So, I like the large chart look. I really do. I just think you guys got to nail these entries. You've got to learn to trust these entries. Because great entries create manageable trades. Great entries reduce your risk. Great entries give you the opportunity to get paid long before the scared people jump in. Big chart still good. Odds favorable. Take the high one. Add on at the low one, right? That's 3 for 3. Pete, 3 for 3 getting stopped out in an area inside of triggers with a perfect large chart. And then when it comes back right to the area inside of the favorable large triggers, you wait for confirmation and it goes to the area. Hey Cab, take care. It's good seeing you. 3 for 3, Pete. This is very unlike you. Just saying. At least 3 laps. And then this one's wonky. You wait for confirmation, and it's easy, right? So Jeffrey, this is why we don't just jump in on the wrong side of stuff, because there's probably going to be retracement. And guys, it was the perfect entry with the perfect stop, with the perfect target, Pete. So you can take one of the laps off because that was a nice recovery. But I think it's awesome. And I'm going to say this. Guys, Pete is a phenomenal trader. Pete could teach this classroom. And Pete's made a couple mistakes today, and that's okay. It's okay. Mid-band held, triggers never rolled, everything rolled up. And Cindy said, you know what, with nothing in the way and everything rolling up off of an area that just held, what do you say I take a pull back to the triggers? Not the area inside, but rather just the triggers. She knows where her stop goes. She created the box. And beautiful trade, Cindy. Beautiful trade. And Pete, I've had days where I've gone back and studied my trades and been like, wow, I didn't see that in the moment. I didn't know that. Holy crap. And guys, you'll do it all day long. Cindy, great patience on waiting for your entry. And when everything agrees, it really became effortless for you. Really nicely done, Cindy. And not a termination condition in sight. Steve Diego, you've got a lot on your mind, but you haven't posted it yet. Your name's been flashing for the last 20 minutes. Oh my goodness. Who was this? This was Luciano. Yeah, it was. Everything says down. Luciano, did you notice that you don't have synthetics on your 13-2? Because you would have pulled back right to them, right there, probably. Yeah, you're missing your synthetics. And then just great. Everything says down and you go down. I'll love it. Great trade, Luciano. One thing about NASDAQ, and I don't know how often you're in here, because you don't post a lot. When your small triggers are up super strong like this, very often just taking a close on the other side, or at least letting it get to the other side, really helps. It really does pay dividends on those trades, especially when maybe it's not perfect on the large chart. So Steve, now you can, when you create a tick replay checkbox, it's missing. Okay, Steve, let me show you something real quick. Go to Tools, Options, Steve, and then under Market Data, make sure that it says Show Tick Replay. And if you did a rebuild, that's probably not checked in there. So go to Options, Market Data, And make sure that that's checked, and then you should see it, brother. Nice one, Luciano. And then Ron, the broken record that he is, no worries, Steve. Odds favorable, clear path, strong everywhere. Let's make some money. And you know why I love Ron's charts? Because if you look at Ron's charts, 99% of them look exactly the same. 99% of them have the exact same words written on them. 99% of them are all about momentum and a clear path and the ability to get paid when there's nothing in the way, guys. And when I told you in the beginning of Classroom, once you understand momentum and once you can determine that the path is clear, the opportunity is endless. Absolutely endless. You've just got to find your groove. Gary, termination. Things roll. All right, so Wayne and Cindy and Joel and you guys doing the white bar trade. There's your termination on the large chart. So everything that you learned from the high probability trend trade about termination conditions is needed for that trade. But you also need a range chart, guys. This is adding another chart. And there's a couple things that happen here. The first thing is his fast triggers roll. That's a big part of it. Then he gets a white bar right off of that termination condition. And he says, you know what? Let's do it. And he gets in and he gets stopped out. And then everything rolls. And it gets pretty effortless all the way down, guys. And there's a big difference between might and has. And it's a huge patience piece. When everything agrees with down, the market tends to go down. And when it doesn't all completely agree, it doesn't mean that there's not a trade yet, but it means that you may have to take it twice because they're still fighting. And I'm going to show you this picture. This is one of my favorite pictures. And I made this a long time ago for a gentleman that was struggling with getting into the market too early. And this is using a range chart, but the same is true on your small chart, guys. Everything is coming up and you reach Fibonacci resistance, and your initial response for a lot of you is go short. Red line, go short. I see a red line, let's go short. If I'm the first person in, oh my gosh, children will sing songs about me. But the reality is when your chart looks like this, when everything's green, the likelihood of another push up is pretty high. So the likelihood of you getting stopped out is pretty high. The likelihood of you getting stopped out a second time is pretty high. And the likelihood of you getting stopped out a third time and a fourth time is pretty high. Do you guys see how my triggers are all still green? The background's red, but the triggers are all still green. But once everything rolls and agrees, and man, I can't stress this enough. Once everything rolls and agrees, it gets a lot easier. And check this out. This price where you got stomped is the exact same price when everything agreed. And this beautiful area right here is where where the crowds fight, where the buyers and the sellers fight. So there may be an opportunity for a white bar trade. Wayne, Cindy, Joel, Gary, right? But if the white bar trade doesn't work off your termination, it's easier to let everything roll than look for the same opportunity. And I've seen people get crushed 5 or 6 times trying to catch the top, and then when it's finally easy, they're worn out. They can't do it anymore. They're frustrated. They're exhausted. It was difficult. And they're like, okay, I just can't do this anymore. Nice one, Gary. Great trade, great recovery. Great job keeping your head in. And then Ron, man, you are the most boring trader ever. Everything says down. The path is clear. And for you other people jumping in, notice how he gets below the thing that can create a bounce, and down it goes. And yeah, you could have gone earlier, made your money, let it dance, make your money again. Great trading, Ron C. Thank you for that. Gary, great trading. Pete, awesome stuff. Cindy, everybody that's posting. Goals hit, awesome, Gary. Go do life. The other thing Ron C taught me, guys, life is for living. Don't spend 12 hours in front of a computer. Learn how to get so freaking good at it that it's beach time by 10:30, 10:40. Go play golf. Go surprise your wife at work, hold her hand and buy her lunch, right? Do something cool with the money that you make. That's it. Amen. All right. We got through all the pictures, right? We got through all the pictures. Gary, I've been there. I have been there. How cool is it that you were patient because your rules weren't met, and then it gave you the perfect trade to get you down to fibs? Guys, the market is a bitch goddess. It gives with one hand and it takes with the other. Do you guys remember the picture that we took up here? Gosh, I love it when the market gives me lessons. Up here, we didn't have odds favorable. Up here, we didn't have areas inside of favorable large triggers. Up here, we had no trade, and everyone in this room was frustrated. How am I going to make money if the market doesn't go up? How am I going to make money if I can't get my rules met? Nexgen sucks and Mark is a snake oil salesman. Well, and then it reverses. And it gives you odds favorable momentum. And it provides you the clear path. And it gives you the perfect entry. And if you were done stewing about all this nonsense, you got paid down to fibs. Pretty cool, right? Do you guys see it? Right here at 9:52, 9:53, you guys got paid. Right here at 10:27-ish, 10:28, you guys got paid. You had 45 minutes of sitting on your hands, guys. You had 45 minutes of your rules not being met. You have 45 minutes of using the phrase, not my money. And that is one of the greatest lessons that you can get. You don't need it all. You don't need it all to be rich. You don't need it all to have the new house, the new car. What you have to do is believe in advantages and don't hesitate when they're present, right? Look at how much it dances right at the fib. 3 divergences keeps me out. Just gotta kind of wait. All right, guys, that's it. That's all the pictures. You needed to buy a 69 Charger. That's a nice car. You gonna paint it like the General Lee? That was a 69 Charger, wasn't it? Careful, you'll get canceled. Nice. I do love the hot rods. Alright guys, I guess I'm going to take my second break. We've made it through all the pictures. Crude oil's losing momentum, multiple divergences. Do you see it? Not the best momentum. It's kind of verifying that the momentum isn't great. It's not perfect. I do have that clear path again. But I sure have given up momentum. So guys, I'm going to take 5 minutes. When I come back, Zorro, we'll start with you. Guys, I want you to do me a favor. If you have a question, ask it. Let me know what I can help you with. I'll see you in 5. Let's talk about another cool little lesson and how chart reading kind of sets the tone. So guys, if odds favorable momentum is why we get in at the highest point of support or the lowest point of resistance, doesn't it stand to reason that if the momentum is going away, I keep doing that, if the momentum is going away, that the market may push further? And this is how you begin to think, man, I'm losing momentum on the large chart. I've lost momentum twice on the small chart. It stands to reason that with a loss of momentum, the market may push up a little higher, right? So it kind of keeps your guard up. Rule number one's not met. Maybe I insist on a reversal bar because it could push a little higher. So guys, you're chart reading and you're not going to recognize when it's happened. And that's kind of the weird thing, is you're not going to recognize that you're starting to make these great decisions based on your chart read. But there's so much opportunity. So much opportunity. If you wanted to take that one, there's your reversal bar from the split triggers. Off it goes. There's your reversal bar from split triggers. Off it goes. Kind of cool, right? What do you guys want to talk about? Let's look at Zorro's chart. Zorro gets stopped out from the momentum trade on the way up to this one. Zorro, did you do that? Did you take the jump in trade and get stopped out right at resistance inside of triggers over here? And then you take it down, get paid, comes up, another short, get paid, comes up, another short, get paid. Great trading. Zorro, it's great trading, everything except that stop out. That one makes me a little sad. But I know you know what you're doing. All right, Gary. Pivot from space. Past mid-band. Odds favorable. 0975 is your entry, which is somewhere right up here. Or maybe it's over here. I'm just not sure. 1050. 1050. So your entry's right here with weak triggers into the divergence high at 15, almost completely into the divergence high at 15. And it breaks anyway and you make some money. Gary, and so I have to ask, I know that you're mentally exhausted, right? Does this really fit your plan with weak triggers into a divergence high? Not from a term? But don't the rules say that you have to have a termination condition? And you're definitely not from an HVA. And an HVA says that you have to have a termination condition, and you identified pivot from space. Is this your termination? I guess it's the NASDAQ. There's your termination. Hold on. Because this is NASDAQ, I got to change my thinking. Pull back to 1-to-1s, all triggers up. You know what, Gary? I apologize. Termination. White bar triggers roll. Never mind. Guys, this is where I've got to remember which market you're trading. Because on the NASDAQ, that's a termination. So Gary, respectfully, I apologize. Perfect trade. I don't need you to post the rules for me. I know them. I read your chart, pivot from space, right? And I couldn't line them up where you got in. Because this doesn't show your entry. And if this chart leads the way, and your arrows are all pointing over here, doesn't it stand to reason I think you got in somewhere here with momentum? But you didn't. You got in all the way over here after the termination. Sometimes, guys, I'll be human. But when you give me 17 days worth of charts, there's a good chance I'm going to miss something. And that's okay. I'll always admit it if I make a mistake, guys. I make lots of them. Ask my wife. Right on. One of the things for you guys, and last time I said this, you told me to suck it up. Just for when you're giving me pictures, guys. It's okay to cut it a little short if I don't need it. There's your termination. There it goes. You don't have to give me the 5 minutes before, and you don't have to give me the 5 minutes after. And all that does is it makes a smaller picture, which means it's easier to read when you post it. I'm fine. Post however you want. We'll be good with it. But if you want me to be able to make it big enough to capture in a single view, that's big enough for the class. I just can't get everything in there. But I can work through anything. Luciano, talk about yo-yo. No momentum, clear path. So you jump into the momentum trade without momentum, Luciano, and sure enough, it retraces. And then you jump in on the wrong side of the small triggers, and sure enough, it retraces. And once you get to the right side, your stop is there, and it eventually goes down. And this is a good example of using an area with the potential to hold. All the triggers below resistance, if price retraces to resistance, the rules of termination conditions suggest that that area may stop the market. And it does. And Luciano, you did a good job with it. And then you get out at that divergence low. That was a lot of work for a little bit of money, though, wasn't it? That was a lot of work. It happens sometimes. We've all had that working harder. Stress. Not much to do there. All right, guys, that's all our pictures. That puts the burden of conversation on you. What do you want to talk about? What's going to make you like the software more? How's that for a question? What do you feel like you need to know to be able to use the software more effectively? When you go to sleep at night, what's that thing that rattles in your brain? What's that dream that you have? Your entry suck. Patience. All right. So let me address both of them. A skeeter boat. So let me address both of those. And guys, this is not gospel truth or next gen curriculum. This is the world according to Mark. This is Mark's experience that he's going to share with you. Ah. Hold on. All right. So when my entries suck, I ask myself, here's the thing. This is what I do. So Jeffrey, this is for you. I ask myself, am I early or am I late? Because it's one of the two, right? If it's one of the two, so this is the first question I ask. Man, my entries suck. My risk sucks. My profit potential sucks. Am I early or am I late? So, if I'm early, I've got the fear of missing out, right? I've got the FOMO. Don't want the market to leave me behind. What does that do? That increases risk. And actually decreases room to target. So how do I get over that fear of missing out? How do I get to that point to where I'm not worried that the market's gonna leave me? And then Jay, this goes back to the patience as well. If I go back and I open up a large chart and I start circling these things, right? I want you to see this. We'll circle this one here with the potential. No circles in this whole area here. And I'll circle this one down here. So this is patience, Jay. From midnight to 11 a.m., I've got 3 circles. What does that mean? That means that from midnight to 11 a.m., there was the opportunity for me to make money pretty easily at least 3 times, right? Maybe more, maybe one right here. Maybe some of Ron's trades. But there were breakouts, the ability to make money pretty effortlessly 2 to 3 times. Does that make sense, Jay? And I think this is important. So if I go to crude oil, we watched people make money twice here. Easy, easy. We know that this one was easy. That's like an hour and a half, 3 trades. We saw all of the consolidation, and then if you happen to be up at 7 in the morning, there's another one. So guys, this is 6 hours, 4 opportunities that fit the rules. So Jay, I ask you, and that's it. So now, why is patience a problem? You just answered your question. Because you're not following the large chart, because you're looking for small chart entries without large chart support. So your patience, and this is a peak trick, is when I've got 2 charts up and the large chart leads the way. Jay, is there any reason you couldn't minimize your small chart until the rules are met on the large chart? That seems like a pretty good fix, doesn't it? Just don't even bring it up. And then once the large chart says that it's time to go, bring it up. Something to think about. But I think that this right here reminds you that you don't have to be in the market every minute to make money. You don't have to be in every move. You don't have to be in every trade. You don't have to be in every up, every down. You don't have to be the first one in. You don't have to be the last one out. So Jay, you put your stops too close. So your troubles just keep compounding. Jeffrey, you've got to figure out why your entries suck early or late. And then you've got to go back and do the study to learn how to trust the entries. You've got to go find 50 pictures of high probability trend trade entries. You've got to learn to believe that that's where your advantage comes from. And I know because I've had to do it myself. So Jay, if I asked you to send me your trading plan right now, could you do it? Do you have it written down in a PDF file or a Word document that you could put in the email right this very second to me that defines why you'll enter and why you'll exit the market? No, not my plan. Are you talking about the KISS plan? That's your plan? And that's fair. But doesn't this define exactly where your stops go? And doesn't this insist that the large chart leads the way? So Jay, it comes back to trust. You're focusing on getting paid. You're not focusing on the process that gets you paid. Does that make sense? And this is for everybody. It's true. I've been there. I've done that. I want to make money. Bullshit. I want to take the correct trades because the correct trades have been proven to win more than they lose. What does that mean? That means that if I have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trades, right? I have 10 trades. Let me go all caps. And I take a loser and a winner and a winner and a winner and a loser. and a question. Whoops, sorry. And a winner, and a winner, and a winner, and a winner, and a loser. This is 70% wins, isn't it? This is 70% wins. When you're thinking about the money, you're terrified of the 30%. When you're thinking about making sure that you're making money instead of taking the right trades, you're terrified of the 30%. The 30% is the cost of doing business, Jay. You've got to be willing to take losers. And it's easier to take losers when you know that you're trading a pattern that wins more than it loses. You start to not care about the result. But what happens is when you're afraid of the losers, you get in early and get stopped out. And when you're afraid of the losers, you put your stop in the wrong place and you get stopped out. And when you don't have the advantages on the large chart, but you trade the small chart, you get stopped out. And now your win percentage is at about 40%. And if you never lose, it's because you're not trading. And guys, it's easy for me to sit here and say this. It's easy for me to say, oh, this is so easy, right? Work through that shit. But the reality is that's what we all have to work through. So when you stop expecting to win every trade, guys, you will start winning most of your trades because you're going to focus on the execution of the method. And again, Mark Douglas has this thing. He goes, if I flip a coin, I never know what's going to happen, right? I never know what's going to happen if I flip a coin. So if I bet heads, I got a 50% chance of winning. If I bet tails, I have a 50% chance of losing. But if I weigh the coin so that it lands on heads more often than tails, is there any reason that I should ever bet tails, guys? And let that sink in. If I know that if I flip a coin 100 times, in 60 times it's gonna land on heads probably, and 40 times it's gonna land on tails, would you ever bet tails? Or would you just let it go and take your winnings every day by doing the exact same thing that has been proven to win more than it loses? Does that make sense to everybody? The psychology of trading is a big part of what we do, guys. Holding yourself accountable to your actions is huge. Owning your trades. I'm not a psychologist. I'm not a trading psychologist. But I've seen the market enough to know that when the smalls are above the large, but the large are red, I don't have momentum to the downside. And I also know that I don't have a clear path to the upside or momentum, which means, guys, this is what I like to call a sandwich making pattern. I'm going to go make a sandwich. What do you mean ES turned down 600? I don't understand that comment. My large are up, my small are below them, the trend is down. I've got a termination right here. It went green, red on big, green on little. So what does that mean? What's your large chart read, Jay, sorry. Price reached a divergence low. Triggers didn't break. I'm coming from a termination condition. That supports potentially more up. My smalls are up, my large are up. But I don't have rules met for a trade. Not yet. Unless maybe I'm an HVA trader. Maybe I am a white bar from a termination condition trader. In which case, my ability to read charts and recognize termination conditions on the fly put me in a long position right here, and I'm still getting paid. So Jay, right now, there's not a high probability trend trade. But there is a termination where things rolled, where a market flow chart said, hey, guess what? You've got an opportunity right here to take a long trade. That might be your next trade. But if you're a trend trader, you didn't get it yet. It hasn't set up. You were hoping, wishing, wanting. So just because it turns, because it's red on the big and green on the little, you can't have momentum. So any trade that you take is void of momentum. And that's it. It's just talking about advantages. How many of you are thinking, well, how do I get paid there? None of my rules are met. How do I get paid? It was all red when you got in. Where did you get in? Why aren't you sharing pictures with me? Did you go short? My large triggers have been up for the last 30 minutes. So I never had odds favorable momentum. Certainly not favorable large triggers. Still don't have momentum. We'll see what happens. We will see what happens. And Jay, I'm not trying to bust you up here, but guys, it's silly to lose trades and not put them in the room and ask for help. That's the whole reason I'm here. Like, my whole existence in the Nexgen world is to help you. And to minimize your learning curve, post pictures of your trades. Every trade in class, win, lose, or draw. If you win and the rules are wrong, you may have a short-term victory but a long-term failure. How will you know the difference? To be sure, you need feedback. We're here to help. If you place a trade on the simulator, if you participate in class, there's no risk of loss or capital. You need someone to tell you what you did right or wrong when you're new, guys. Nexgen offers this to new traders. This is what we do. That's it. All you gotta do is post a picture, private lesson. Post a picture, private lesson. Steve Diego says, check it out, Mark. Price above large, strong triggers, small, strong triggers separated from large triggers. With this momentum and trigger look, price has the potential to get to the target. Was creating crude oil charts, looked up over at NASDAQ, saw momentum set up, entered for quick profits. But with this freight train, there was the potential to reach the fibs. Amen. With that much, there's potential to reach. You get in above the problem area. You take quick profits. You take quick profits. Price above strong triggers, taking a momentum trade with momentum and a clear path. Steve Diego, it's awesome. And man, you made $300 in 45 seconds. And it made it eventually, right? That was your trend trade to finish the move. So the question would be, and first of all, props and praise, gold stars and virtual high fives. You took the perfect momentum trade. But you missed the perfect trend trade to finish the move. Does that make sense? And you might have been somewhere else. You might have been doing the Happy Me dance, celebrating your $300. That one didn't get you, and you're going, oh man. And then when this momentum fails, and the large chart looks like this, more often than not, we're talking trend trades to reach areas. The potential's there to get there. And I love that you say potential, and I'm not going to lie, there's the little giggle in my head every time. Because it means that me being annoying paid dividends. Great trading, Steve. Absolutely great trading. Nicely done. All right. Give me a wire and in. Do I have momentum? Do I have odds favorable momentum? Is rule number 1 met on this chart, guys? What do you think? No. Do I have a clear path? I suppose so. Should I be looking for an entry if I only have half of my advantages on the large chart? That's up to you. If you took it at 90 and a quarter, you may have gotten stopped out. If you took it on the reversal bar, you may have gotten stopped out. Can you see how it's not perfect? If it fits your rules, take it. If it doesn't, don't. For me, when my small triggers are below the large triggers, I'm not a huge fan unless I'm right up, butted up against one of these fibs. That's it. It's hard to sit still and do nothing, right? Because if I go long right here and it wins, I look like a rock star. Look at me, called that trade. I didn't have momentum and shit, I'm on the wrong side of the small triggers and oh man, I'm doing this live in front of class. Oh crap. No, wait, no, it's going. I'm good. Hold on. Maybe if I give it some breathing room, that'll be better. What do you guys think? Oh, no, wait. Maybe if I move my target closer, that'll be better. Let me change my plan. Oh shit, it's going down even more. I better add on to the position so I can make up for that negative. And then there's no way they'll get me down here, right? That seems logical, doesn't it? This is how losing traders trade. I know my rules aren't met, but what if it goes? I know I don't have the advantage, but I'll take it anyway. I know I'm on the wrong side of everything, but to hell with it. I really want it to go. And if I just give it $1,000 worth of room, I'm guaranteed for it to go, right? Poppycock, I say. But we've all done it. If you say that you've never done that, you're probably not being as truthful as you probably could. But why did I do that? Because the large chart leads the way. And man, if this is the look on my large chart, I am void of advantages for a trend trade. Without momentum, why on earth would I expect the market to continue pushing in the direction of the trend? Man, he just lost money live right in front of a class on simulator. What a great lesson. Did anybody learn something there? Did anybody go, oh my gosh, that's what I do? Maybe I should stop doing that. Been there. Guys, I've been there. There is no mistake that you can make that I haven't made. Not one. Can guarantee it. Mark, I meant to go long and I hit short. Done it. Mark, I took the wrong trade and put a lot of risk on it. Done it. Mark, I took the perfect trade and jumped out 2 ticks into it because I got scared. Done it. Traded into terminations, fought triggers, tried to be first. Watched the small chart instead of the large chart. You name it, I've done it. And I've probably found a way to fix it. Look at that. That's a termination, right? And it reversed the market directly into resistance. Directly into resistance. And it is, Joel, it's hard to break the cycle if you don't believe in your rules. And I'm going to tell you, even if you do believe in your rules, some days it's hard. Some days you're not mentally focused. Some days you make silly mistakes because you start to take your greatness for granted. I think so many people make a lot of money in the morning and give it all back in the afternoon because they feel invincible. I see it a lot. I've done it myself. Done it myself. Start wanting to be in every move instead of the best move. So I'm just rambling right now, guys, and I apologize for rambling, but I'm telling you, this is just part of it. Knowing when to quit. Joel, thank you for saying that. Knowing when to quit is huge. Anybody ever lost $400 or $500? Say, man, that's my stop loss. I should really shut it down. And then that little devil sits on your shoulder and says, just one more trade, Joel. Just one more trade. Double your contracts. You can get it all back. Every bit of it. It happens, Jay. It's normal. It's part of it. And guys, this is what Simulator is for. Simulators is to work through those demons. Simulator is to practice your management, to practice your entry. And everybody says, well, I need to make money. Go get a job while you learn this one, right? Walmart's always looking for greeters for people that can't follow plans. This is very doable. You've just got to learn how to do it. There's no doubt it works. You watch people make money every day in this room. Every day, people are successful with the highest probability trend trades. We watched it happen here. We watched it happen here. Exactly as taught in the room. Guys, it's these nonsense areas where people give their money up. Cam's in the room. If you guys don't know Cam is my favorite nephew that's not my nephew. Good people. If you're working with him, lucky you. He'll take great care of you. All right, I'm going to start going through pictures and stuff and find something. Whoops, just opened my trading view. Oops. Have you guys seen this one yet? If you're brand new, this is kind of what you're in for. Looks like fun. Hold it, I've got to learn stuff. What are you seeing, Jay? How about if we do that? I talked about what I saw. What do you see? Do you have odds favorable momentum? Not really. Everything is horizontal, not vertical. Do I have a clear path up? I don't see one. Do I have a clear path down? I don't see one. Is it possible that I don't have an advantage going either direction as long as it's rattling in this area? And my best bet is to do nothing. That's what my plan says. My plan says, Mark, if you don't have a pattern that has been proven to win more than it loses, why the hell are you wasting money? Why are you trying to enter the market? Look at that. Is it going to go up or down? Ooh, I haven't done this in a while. Let's find out. Will crude oil go up? Most likely, it says. Wait a minute. Let me get a second opinion. Will crude oil go down? Concentrate. Okay, hold on, guys. Concentrate with me. Can't predict right now. Hell yeah. All chips on black, right? So what color is the trend? So watch this, Jay. Next level. What color is the trend? Are we up or down on the trend? It's green. It's up. What direction are our large triggers facing? Up or down? East? But they're green. They're up. Are my small triggers up or down? They're up. So, Jay, that's it. You could say this market is more likely to go up than down, right? But I don't have a clear path, and I don't have momentum, and I don't have an entry. So, if it continues up and breaks this area, I'll look for a trade. And if everything turns and it continues down, I'll look for a trade. And until I get the hell out of this range, I've got terminations above me and below me. Rule number 2, not met to the bottom. Rule number 2, not met up. Let me sit on my hands and do nothing. Because why on earth would I give money away without advantages? And it really can be that easy, I promise. And it means that you have to sit on your hands. Now the momentum is growing. But it's still a termination. So what needs to happen? I need to see my small triggers. Who cares about the small chart, Jay? There's my divergence high. Let's see if it stops the market. All the triggers are below it. This is where hopium kicks in, right? Because right here, you'll say, well, shit, this has to break, right? Look at it. And you probably set it there and lost too. So what are we waiting for? We're waiting for the smalls to get above. So we at least have the potential to break, right? Get up there, smalls, go. And if they do, Jay, look at this. I've got some areas inside of triggers. Maybe doing nothing was cool. But let's see the triggers break. Let's wait for some rules to be met. The momentum is awesome. Bum, bum, bum. Potential to break. If I get a reversal bar,
Order submitted.
then my limit order goes a couple ticks above support inside of favorable large triggers. That's what my rule says. I have a strong bottom, I have odds favorable, I have the potential to break, and I have a window of opportunity that is approximately, let's bring this down, we'll turn this into our window of opportunity. From the highest point of support to the lowest point of support inside of triggers, my limit order is 2 ticks above it, with the potential to break. Is everybody with me? Isn't it pretty awesome that I didn't give away $1,000 when things didn't pan out? Isn't it awesome that I didn't feel compelled to be the first one in? Because if I felt like I was going to be the first one in, I could have gone here and gotten stopped out. I could have gone here and gotten stopped out. I could have gone here and gotten stopped out. Or I could just wait for everything to agree and hope the small crowd has it in them. So let's see what happens. Not guaranteed a winner. Oh, get it. Get it. Come on. Come on. Oh, it's just messing with me. And my stop is where the market shouldn't go if this is going to be a winner. My first target is at $100. My second target is at $100. Am I guaranteed a winner on this medium probability trade? No. Did you notice that divergence printed on a 50-50? Sometimes that's a kick in the clackers. So we'll see what happens. Got my stop where the market shouldn't go. I'm still inside my window of opportunity. I still have odds favorable momentum. It still has the potential to break. But it's not a high probability scenario, guys. And I said it, divergence is the #1 killer of the 50-50 trade. Divergence is the #1 reason that the 50-50 trade fails. But I'm just going to let it play out. I chose to ignore that rule. And I'm either going to get paid or I'm not. It's either going to go up or it isn't. I'm not in control of that. I could go fix a sandwich right now. Couldn't care less. This is why we don't put stops inside of the window of opportunity. Could you imagine getting stopped out right there and then it goes up? Oh, that'd make you yell at the dog. We'll see if divergence really is a killer of 50-50 trades. Or if we can find something. Man, I'm still in the window. Oh, there we go. I guess divergence in a 50-50 trade isn't the best bet, is it? Hold on, let me double check my rules. And let me see if I just broke my rules. Aw, son of a man. 3 times. 3 times it told me don't take that trade, but I took it anyway. I took it anyway. And guys, I told you it broke rules before we ever got filled. I told you that it broke rules. And if you took it anyway, you're not allowed to be surprised that it didn't work out. That's not the best way to take a 50-50. But this is why we go back to rules. This is why you have to know what you're in for. So what if you said, it's a 50-50, I'm from a strong bottom, everything's up, it's not perfect. I'll wait for a reversal bar so my risk is established. Does it change the fact that there was divergence on a 50-50? Hell no, it doesn't. But I see you guys doing this. Well, it gave me a reversal bar. Even though my rules aren't met, the reversal bar has got to guarantee me a winner, right? And I'm really hoping that it whips my ass real quick with those small triggers down. This is what people do, though. I know my rules aren't met, but I got a confirmation bar. What the hell are you confirming if your rules aren't met?
Order filled.
So if you're lacking patience, you need to up your commitment to having rules met. If you're not sure about your rules, you probably need to study them a little better. You need to know what it looks like when they're met and when they're not met. And guys, I'm telling you, opinions kill traders. Emotions kill traders. When you don't care what happens next, you simply say to yourself, you know what, the advantages are there, I have to take it. That's when trading becomes effortless. But does that make sense to everybody? I made a choice to break my rules, and I lost. Back here, I made a choice to follow my rules, and it won. And guys, I will give away $1,000 on simulator to drive a point home. Until you have the reps to make logical decisions based on your ability reading the indicators, the easiest path, the easiest way to stay in the game, the most consistent way to win more than to lose is just embrace a plan that's been designed to optimize your chances of success. You'll break out of it, but your guts are going to lie to you. They tend to a lot. And look at that one. There wasn't momentum, and golly, down it goes. Sorry, does it seem condescending when I don't act surprised? I hope not. I've had to go through this, guys. 1,000 times I've had to go through this. 1,000 times I've had to take it in the teeth. Just bam, baseball bat to the face, breaking my rules. White bar trade. So here's the deal. On a white bar trade, I won't even discuss it if it's not a termination. Why, Joel? Because I'm freaking human. Because I'm human. And I start spending the money that I haven't made. We all are. You got to overcome that a little bit. So termination, no triggers through. Heck yeah, Steve. Termination, let's just kind of confirm. Termination, oh my gosh. White bar right off the area is cool. You got to let those triggers roll. Yeah, Steve, it is. It's not the best look. Because the fast are still inside and kind of going up. But if you wait for the white bar and then the pullback to the triggers, which is exactly what the rules say, triggers roll, pull back to the triggers, Brum pow jing. All the way down. And then if you wait for it to actually roll, Steve, were you here for the lesson when I said that the entry before it rolls is typically the same as when it does roll? So at 11:18, everything says up, right? And then once it starts to roll, they come back to that area one more time. It's the coolest phenomenon, and it doesn't always happen. But it happens enough that when this is still really hard up, I don't mind waiting for a little bit of a roll. Pays dividends. But it's a great read. Termination. These triggers had to roll, and they did, and you took the pullback right to them. You nailed it, dude. Perfect. Ron, go live some life, and congratulations on 2 years with us. It's nice to have you for that long. You are a staple in this classroom. Andy, you say, I remember those days when you get upset that only one of your lots got filled. Now if only one gets filled, you know that it's going to the right direction to your target. Not a problem, really. That's great, Andy. That is experience right there. How come only one got filled? Because they're all scrambling in the direction of your trade. That's a wonderful feeling eventually. Nice. Thank you for sharing that. I like that. Didn't have momentum. Isn't going up. Didn't have a clear path with divergence. And they're dancing right around the fib, guys. This is pretty awesome how this works out. And it works out like this